Hey, and welcome back to the MGR podcast, where we talk with real people about real money and real estate. Today, we got an exciting episode planned. We got Murray Massey, a fellow exit realtor, here with us today. We're going to be talking about a little bit of everything, a little bit about who he is, some of his goals for the future. We're going to be talking about multifamily and commercial real estate, how you can get into it, how we can set real expectations, and a little bit about everything. So we're going to dive right in. We're going to get into it. We're going to have a good time today on the podcast. But Murray, we want to introduce you a little bit. Tell me a little bit about yourself, a little bit about what you used to do, and a little bit about kind of what you're doing now and where you're from, and just a little bit about you.
Yeah, for sure. So currently I'm a realtor in St. John, New Brunswick, with Exit Realty Specialists. Really enjoying that. It's a lot of fun. So Micaiah, you're an exit too, so you know what it's all about.
Oh yeah.
Yeah, and I'm focused more on the multifamily and commercial space.
Yeah.
I still do residential, like there's no issue there, but my main primary focus is on the multifamily stuff. So I'm in I guess you call it like an investing group. It's called Wealth Genius, very similar to something like Keyspire. So it's a real estate education platform as well. Yeah, so there's a lot of networking that goes on there and that type of thing. And I've gone to their events, spoken at their events as well. So that's been a lot of fun. So trying to stay as involved as I can in it.
Yeah, that's awesome.
Yeah.
So right now you're living in St. John. Have you been in St. John? Tell me a little bit about like where you were born and raised, what you
Background kind of deal?
Yeah, a little bit of background about you. Give me a little bit of info on that.
Yeah, for sure. So born and raised in St. John, New Brunswick. I've always been there, like to travel around as much as I can, but always keep coming back home for some reason.
Yep.
I was in heavy construction previous to being a realtor. So I was driving trucks, doing foundations, drain tile. We did a little bit of work with septic systems and stuff like that, kind of have a rudimentary understanding of that. Also have my first part of my crane operator's ticket as well. So yeah, pretty much anything heavy construction or construction related. I did a lot of it myself too.
Yeah.
So renovated my first home from the studs back kind of deal. And that's actually how I got into real estate.
Yeah. Now, is your family, like, have they been real estate investors, or how'd you kind of get into, like, where'd your interest in multifamily real estate investing come from?
Yeah, so my folks have a multifamily portfolio, and for those that don't know, that just basically means they have a bunch of apartment buildings.
Yeah.
Yep, and I've grown up with it my entire life, so they've been in the business a long, long time, many decades, and since I was a little tiny kid, my first job ever was sweeping the hallways at the apartment buildings, so that's what got me the knowledge in it as well. So obviously being with somebody that's like my dad, who's been in it for that long, I've learned a lot about it. So I kind of had a bit of a leg up that way, and then just furthered that with being a realtor and also the real estate education side of it. So
no, seriously.
So
I mean, as a realtor, like, everybody we know, like all the other realtors, I mean, not just all the other realtors, but realtors as a whole are very different. Like, everybody's different. Everybody has their own niches. Everybody has their own, flavor, if I may. But definitely having that kind of construction background, like you say, having that, experience in multifamily, like with your folks owning multi units, it really does help, and it makes a big difference, and it helps you to kind of narrow down your niche, and it gives you a leg up, like you said. So that's super cool. That's super cool. Now, so how long have you been selling real estate for?
So coming up on 2 years now. So it was February 2nd, I guess.
Yeah.
So almost 2 years now, and it's been awesome. Really enjoyed it. Haven't looked back at all from the construction side. It's a lot easier on the body too. You're not bouncing around in old trucks and breathing fumes all day and concrete dust and everything else.
Oh, the concrete dust. Yeah.
So no, I found what I want to do, and it actually blends very well. So if you know, like, the terms blue collar, white collar, so I never thought that it would actually blend that well, but having that prior knowledge, especially on the investing side of things, if people are looking to do like a flip, like, or fix a place up, value add strategy, it lends itself very well to it, because I can speak directly to knowing, okay, this is a massive ordeal, or no, that's a really easy thing to fix. So it positions me in a kind of a unique way, I guess.
No, that's awesome. Now, how do you find, I like to ask everybody that's on, a little bit about, personal and work life balance kind of thing.
Okay.
How do you find, like, because now, I mean, people that aren't real estate agents or realtors or whatever, they never, nobody's ever going to understand the life of a realtor that's actually, like, we're on 24/7 kind of thing. Like, we're always on, it's very busy. We're not always like, I mean, we're not always working, but we are always on. Like, if somebody calls,
we're working but not working.
And like, your mind is always thinking, like, okay, if a house comes up on the market and you see it, okay, wait, is this going to work for any of my clients, any of my buyers? Like,
Yeah.
or like, you're just always thinking about something in real estate. You're always thinking about something about your clients. Now, how have you found the, work life? I know you just got married.
Yeah,
Which
thank
is
you very
super
much.
awesome. Congratulations on that. Now, how have you found like the work-life balance there? And I also know you've been with your wife for a long, long time. We were chatting about that before, which is super cool. Almost like middle school sweethearts, basically.
Yeah.
Which is super cool. But how have you found like work-life balance and stuff, and kind of juggling the busy life being a realtor and kind of being on 24/7? Like, how do you disconnect, I guess?
Yeah, so I look at it more of like, it's not so much a job necessarily as it is a lifestyle. So it's like, even though you are technically always on, it allows me the flexibility that, I can stop into her work, let's say hi, bring her coffee, whatever else the case might be,
Yeah.
and then go do a showing. Or like, so she works over on the west side of St. John. And oftentimes if I'm over west doing a showing, there's sometimes like little gaps in between showings and stuff like that.
Yeah.
So
Yeah.
I can pop in and say hi to her, and then go about my business, and then see her later on as well. But I don't see it as necessarily always working. It's just, if you accept the fact that, you may have to answer a call or a text, just don't let it take over your life. So I'm a big proponent of like scheduling things in and time blocking. And that's been a huge thing too, because I just take certain sections of time and just say, I'm not touching the real estate thing. I'm going to go, be with my wife and my family, and that's it.
Yeah,
So
that's awesome. Now, do you have any like daily routines? Like, is there anything that you do like every morning? Because I know a lot of people, like, whether it's meditation, gym, prayer, what are they called? What are they?
something like
Affirmations and stuff like that.
Yeah.
Everybody has like something. Actually, not everybody has something, but but is there anything that you have like that you try and do like every day, whether it's in the morning or evening or?
So like on the work side of it, I have a kind of like a structured week, first of all. So I'll do, like, we have our, I guess you call it our apprentice meeting or whatever. It's just a weekly meeting we have. So there's that on Mondays, then there's sales meeting, and then there's like a coaching session, I guess, on Fridays that I usually do too.
Yeah.
So I have a mentor, that I meet up with him too. So that's from the week side of it. So I know on certain days I'm doing certain things. Thursdays I do all my follow-up. So I go through my client list, touch base with all the people I haven't necessarily spoken to.
Yeah.
Then on the personal side of it, get up in the morning, sort of journal or write, whatever, try and get things out of my head.
Yeah.
I guess. Go for a walk, do some push-ups and whatever else.
Yeah.
I don't know, a little bit of exercise, get the blood moving, and go hit it.
Yeah. That's awesome.
Yeah.
That's awesome. Yeah. I mean, I heard once, I don't know if it's true or not, but I heard that if there's something that you're like working on or something that you need like ideas for, you're supposed to like think about it before you go to bed, or work on it before you go to bed or something like that. And then like while you're sleeping, I don't know if this is true or not, like if this is just made up, like just tell me, but like subconsciously your mind will like come up with ideas like while you're sleeping and like process it even more like in your sleep.
Kind of choose on it.
Yeah. Kind of choose on it a little bit. And then like in the morning, like you said, like you write down, you get some pen and paper, whatever it is, like, and then you start journaling or writing down ideas that you've kind of come up with. Like I got some guys I work with, like we were chatting the other day. He was like, I was thinking about, this type of prospecting. I had a dream about it. I woke up at 4 a.m. or 3 a.m. and, I made some notes and it was great. I'm going to start doing it, And I was like, yeah, you know what? I mean,
so mine,
24/7. We're always on.
Yeah, even in your dreams.
Yeah.
But no, it's a little, what I use is a little book called the 5-Minute Journal. So it starts out with, I'm trying to remember it now. You put me on the spot.
Yeah.
Basically, it's like what you're grateful for first.
Yeah.
3 things you're grateful for, 3 things that would make your day good.
Yeah.
And it's focusing your mind on a positive aspect, like not really negative stuff. And then, kind of some goals for the day kind of deal. But it breaks it down so that way it's not a whole lot to do all at once in the morning. But it sets your mind on positive stuff, and then, go get it, I guess.
Yeah. I've also, I'm like bad for it. Some people say that you shouldn't like touch your phone like first thing in the morning, and like you should like disconnect like for your first like hour or 2 in the morning.
Yep.
But I find like waking up, grabbing my phone and like just getting right to work, and like it helps me like start my day. Like sometimes, they say like, oh, like shut your phone off and don't pick it up because all the negative things from the world are going to be there, and you got to respond to them, and then you're just having a bad start to your day. But I find like, I mean, it could be a bad thing, but sometimes I feel anxious if I'm not like checking in if I'm not getting back, because I enjoy it. Like I enjoy working. I enjoy answering questions. I enjoy solving problems and, working out these solutions and stuff. But so yeah, for me, it's like I get up, check my phone, lay in bed, answer some emails, and then get up, get the kids out of bed, make some coffee, relax with my wife for a bit.
Yeah.
And then eventually I, head out the door and just kind of have a nice, it's a slow morning. Like I'm not answering calls or setting appointments for 8:30, 9 a.m. I kind of set those later back in the day, but
yeah, for me, like I'm slightly different, and everybody's different and goes through life differently, I guess. But I take 1 hour basically in the morning, and the phone stays home.
Yeah.
Yeah. So I don't touch it whatsoever, and go for that walk or do the exercise or whatever.
Right on.
And that way I sort of know in my head, like, okay, if I need to decompress or something's really bothering me, then I've got that hour. It's for me only, and that's it. I'm a pretty early riser anyway, so up before anybody else, and the phone's usually not going off at 5:30 or 6 in the morning. So
I'll start texting you at that time.
Okay.
Yeah, keep you busy, but
you'll get a response an hour after.
Yeah. Oh, shoot. Shoot. Okay, so let's dive into what the people want. Multifamily, commercial real estate. We chatted a little bit earlier about why you kind of got into multifamily, but what is it that you enjoy about multifamily? Now, before I say this, for all of Murray's clients and all of my clients that we do residential work with, we love you. But what is it that you love about multifamily versus residential, over residential kind of sales and stuff like that?
So I think the thing about it is, and I don't mean to sound unemotional by saying this, but it's a very clinical business.
Yeah.
And what I mean by that is that either your numbers work or they don't work, and we'll get into cap rates and all that other stuff later, but basically it's a business decision and there's not a lot of emotion involved in it.
Yeah, exactly.
And for one way or another, it's not that that's better. It's just that it's simpler, I guess, in a way. Yeah. So it's here's the numbers, here's the facts, here's the figures, here's what it could potentially be worth later on. You factor all those things in. Is it a good investment? And then it comes down to a yes or no. Yeah. That's it. There's no gray area.
Yeah.
And I mean, some investors, sure, they might get a little bit emotional about it, but the professional investors, guys that are doing it all the time, it's just, this works or no, it doesn't.
Yeah.
That's it. So
yeah. And that's why I say all of our residential clients, we love you, but it's
Absolutely.
it is just, it's not even that we don't enjoy the emotional side of selling residential homes, because everybody's got their memories, or everybody is moving for a different reason, buying for a different reason. We love that side of the business. Absolutely. And we love all our clients for that. But the multifamily stuff and the commercial stuff, just the way that we're both wired, we're kind of the same in that it's just like you say, it's not as emotional. It's a numbers game, it's everything's there. It's like you say, it makes sense or it doesn't. And like you said, we can get into cap rates and stuff later, but
yeah. And the other thing I'd add to that, just before I move on, if you don't mind, is well, it's the type, and again, I don't mean to sound crass or anything by saying this, but it's the type of people you deal with. So it's business owners and business-minded people.
Yeah.
And generally, it's kind of it's a bit detached, I guess, right?
Yeah.
Yeah. But it's the networking side of it too, is something I really enjoy. So getting to meet new people and, successful business owners, how can I emulate them? And then how can I turn that into helping my clients a little bit better too? So.
Yeah. Now, okay, so let's kind of go back into that. So you've attended a couple networking events like you just mentioned.
Yep.
Tell me a little bit about some of your favorite ones that you've done, what events you've gone to, and what you've kind of gained from those, and kind of what kind of relationships and stuff, and why you found it's important.
Yeah, for sure. So like I said, I'm part of a group called Wealth Genius, and it's basically, they offer real estate investing education, I guess is a good way to put it. And I don't mean to sound like I'm promoting it or whatever, choose whatever you like, but it's one that I was introduced to by a friend, and he's had really great success with it. He's actually started his investing journey because of it, kind of deal. So I went actually to one of their, I guess it's now a biannual event. It was held in Niagara Falls, and I got to speak there in front of 500 people, somewhere around there. And
awesome.
Yeah, I was completely fine for nerves until he called my name, and then I was I was really
let's go, Murray, Massey. No.
Yeah. I'll be honest, I was really nervous.
Yeah, man.
No, it was good because it pushed me outside of my comfort zone, and it introduced me to a lot of more seasoned investors, I guess. So, and that's kind of a thing, is there's your people that are just starting to learn, and then there's people that are in it for more of the networking side.
Yeah.
because they're already experienced. They already know how to do the deals and everything.
Yeah.
So I really enjoyed that part of it. But what I get out of it, I think, is the networking more than anything.
Yeah.
Having grown up with the, real estate investing, not to say I know everything, not by any stretch, but it's just I'm very familiar with it. So it's more so want to keep meeting all those new people that are like-minded.
Yeah.
Really enjoy that about it.
And I mean, it's not that like a lot of times when you hear about these networking events, like it's always like in Ontario or out of New Brunswick. And it's not that there's no New Brunswick investors that are worth kind of networking with. It's that one, a lot of the people that are already here, like investing and stuff, they already have kind of people.
Yep.
And so we go to Ontario, we go to Toronto and all these bigger cities to kind of meet new people and bring them into New Brunswick and show them, the development opportunities, the investing opportunities, the multifamily commercial opportunities, and show them like the growth that we've had through like immigration and whatnot.
And then I'll segue into that. Sorry, I didn't mean to interrupt or anything, but I really enjoy that because my whole goal is to bring people to New Brunswick. A lot of people have said New Brunswick's a have-not province. I've heard that a lot.
Yep.
And I'm kind of on a little like mini mission to change that, I guess. I want to show people that New Brunswick has a lot to offer. We have an incredible lifestyle here. We're a very affordable place to live. I mean, I know the world's tumultuous right now and everything, but in the grand scheme of things, St. John, New Brunswick was actually rated as, I think, the most affordable city to live in Canada.
Yeah.
So.
Yeah, I mean, I believe that. I do a lot of research on like Moncton, Fredericton, St. John, like average rents and stuff like that, and like average cost of living and stuff. And like, like Fredericton is like one of the most expensive. Moncton is, way up there. And then like when it comes to like major, like if you want to move to Bucktouche or Miramichi or Bathurst or something like that, out in the middle of nowhere, Juniper or something like that, then your cost of living might be pretty low. But if you're trying to get like the cost per what you're getting, like in St. John is,
it's incredible. And some of the opportunities down there. So St. John's the oldest incorporated city in Canada. We've got a lot of old, gorgeous real estate, big old Victorian homes and things like that. And really great opportunities. Now you have to know which ones are good and which ones are bad, like Foundation's bad or whatever. But the opportunity to add value in St. John, I think, is the biggest thing. Yeah. If you want turnkey, Fredericton's probably better.
Yeah. Now, and like, so in Fredericton, like the big industries are like IT, government, and then obviously we got a big like student population with like UMB and St. Thomas and stuff like that. What are kind of the big industries there that are kind of, running?
Big drivers in St. John. So we have an oil refinery, a really, really large one at that. So there's all kinds of skilled labor that's there, so everything from plumbers, electricians, pipe fitters, boiler makers, crane operators. I used to run a crane in the refinery for a short term. So I mean, lots of skilled laborers, and those are all very well paid jobs, often all unionized jobs, obviously, too. So we have that, just heavy industry in general. So we've got a pulp and paper mill. We've got a drywall producing plant. We've got a tissue mill. And then the sort of all the ancillary jobs that come around that. So there's a lot of, suppliers and sales guys and everything else all in that big industrial complex. So that's kind of our main stuff. And then we also have a really large port that was just expanded recently too.
Yeah, that's right.
We've got, I think it's four container cranes now instead of 2. And that was a massive undertaking as well. So lots and lots and lots of skilled labor. So that's our demographic.
That's awesome. We need more of that. We need more of those folks around here, man. It's impossible to find tradespeople and like skilled laborers and stuff to do stuff around here. It's tough. I mean, it's tough everywhere. People don't really, I don't know what it is. Like people just aren't interested in the trades like they used to be, but they are a very crucial part of our industry and stuff.
Absolutely.
Especially here in New Brunswick. But so I want to go back to, so you mentioned Wealth Genius a little bit earlier.
Yep.
Now tell me a little bit about your experience with that. And I want to talk a little bit about, kind of segue into how folks can get into multifamily commercial real estate investing.
Yep.
And just like what you're seeing in terms of their expectations coming into it versus your expectations kind of meeting them. And then also like what the actual realistic outcome is, because everybody's always preaching all these, cap rates, cash flow, this and that. But give us a little rundown on your experience with kind of actual realistic expectations and some stuff that you've run into in terms of just like people with unrealistic expectations, maybe.
Yeah. So one of the things I would say is that, I mean, markets always change and markets are local, right? So one city's like your city and here in Fredericton is different than my city in St. John or Moncton. But also provincially, things change drastically. So landlord-tenant laws are different. The way transactions are conducted are different. So just on like a specifically real estate side of it for a second, in Ontario, if I understand it correctly, you put your deposit down first, then do your conditions. Whereas in New Brunswick, we do our conditions first, then put our deposit down. That makes our sale like conditionally sold sort of deal. So little things like that are a big misconception I find with newer investors, even seasoned ones that haven't come out this way. But then the other thing as well is the market conditions. So like in Ontario right now, they're seeing quite a slide in their values. Out here, we're still getting multiple offers. I had a client, it was on a small little residential home, super popular type of home, went to 17 offers in St. John. So it's still like sort of peak time, I guess, if you want to call it that. It's still very strongly a seller's market. So one of the things I've come across is like people want vendor take back or VTB. It's where they, the seller holds the mortgage. And it's not to say it's impossible to get on a lot of the commercial stuff, like, the commercial retail or whatever, people may offer it. But, why would the seller go for the vendor take back necessarily when they can get 10 offers and go way over asking price? So, and like I say, it's not to dash anybody's hopes, but it's just that you're going to have to work extraordinarily hard in order to make those things happen. And why try and fight the system? Maybe find one that's fallen apart a couple of times on finance or inspection, and then maybe you can negotiate with them on price or whatever. But you have to pay attention to where the market's going. And St. John and New Brunswick as a whole are still really strongly in the seller's market, which is very different from where a lot of these clients are coming from.
Yeah. And to kind of add on to that as well, with like VTBs and stuff, like if you're only trying to get, VTB seller financing, like these, creative financing deals with stuff that's like on the market, it's very rare that it's going to happen, because like most people that put their stuff on the market because they want to sell, they want their money.
They want
either
the top price.
Yeah, they want the top price and they want to like move on and buy something else maybe. So really like, those VTBs and the seller financing, creative financing deals and structures and stuff that we come up with, typically like we're finding those, and I am anyway, finding those like off market and and like you said, in situations where maybe they did go on the market, they've had multiple offers, a deal fell through, they had another one, financing fell through again, inspection failed again this time.
Yeah.
And then you go in and you're like, hey, look, here's a creative option. It does benefit the seller even more, because oftentimes like, they're getting a decent price if they're willing to hold more. Maybe the buyer will pay more. But then they're also like, if they're getting paid interest and stuff on top of that over a couple of years.
Yeah, absolutely.
It can work out better for the sellers. If you can get into the details with capital gains, taxes and stuff like that. Yeah. There's tons of benefits for the sellers. But yeah, keep going with that. Wealth genius, people that kind of have unrealistic expectations on, VTBs and stuff. But what else are you seeing?
Yeah, and I wouldn't say it's necessarily unrealistic expectations, is that they don't understand our market very well yet. And as a realtor, that's part of my job, is to educate the clients that I have, right? So I've got to give them market information. I've got to show them what's going on here. And it's more about education necessarily than it is an unrealistic expectation. They're told that, hey, look, let's be creative with our financing. Let's get the best deal possible. And absolutely, there's nothing wrong with that as a premise, but it's just that you have to understand. And what I've sort of picked this line up from one of my mentors is this a market that you're willing to participate in? So if I ask that question, it kind of really digs down to the bottom of it. It's like, well, okay, am I really willing to go over asking? Am I more patient? Do I want a lot of deals really quickly? So all of these things kind of factor into it. But I would say it's more so just, I don't want to say ignorance, but basically, right? You don't know what you don't know.
Yeah. Oh, yeah.
Yeah. And that's why we're here as realtors. So.
Yeah, exactly. Yeah. And I mean, I hate to say that I'm like a teacher or like an educator, but like at the end of the day, that's what you have to do. Because I know before I got into real estate and before I bought my first house, I was just completely oblivious to anything. And like, now when I'm studying it every single day, learning, going to these networking events, having a mentor and stuff, I'm learning like just an unparalleled amount of stuff, like every single day, something new.
Yeah.
Right. And so all we're just trying to do is just educate people so that we can have realistic expectations and have smooth transactions and, help everybody involved.
Yeah.
Right.
And you don't want to waste people's time either.
Yeah. Well, exactly.
Yeah.
Yeah. I mean, like these investors too, like these Ontario investors, if they're going to come to New Brunswick, they don't want to be wasting all their time just looking at properties and then just, getting upset because like the deal's not coming together or because you can't negotiate a price that you think is fair. And so, yeah, I mean, like, and then they're eventually, people are just going to eventually give up, right? And stop trying to make a deal happen if they don't have those
Yeah, and I think at the end of the day, and that's something I've had to learn as well, is that I need to set the expectation for the client right from the very get-go and say, hey, look, these are the market conditions we're dealing with. This is kind of what's going on. Is it something you want to participate in? And then if yes, okay, how are we going to go about it, right?
Yeah.
So another like little strategy that people have started to use, and one of my 2 largest investors right now, they're coming in with a cash purchase on the property, and then financing it afterward.
Yeah.
So not everybody can do that, and I fully understand that. That's a top level type thing.
Yeah.
But yeah, it's a technique that can be used. It kind of gets around a lot of those sticky issues. So,
Yep. Yeah, and so I mean, by the time this airs, I will have been there and back. But like, I'm headed to Toronto this week to meet with a bunch of investors, and my goal is, and kind of one of the reasons is, one, to just kind of build that relationship with like those Ontario folks and kind of get to know them a little bit so that we can, make the transaction smoother. But also it's to do 2 things. One, give them a game plan of what I need from them.
Yes.
Like when we're going through the process, like when we're writing offers, like, look, I need you to be ready to send the deposit. I need you to be ready to, make quicker decisions because the market moves quick over here. And just, be ready to go, and a big list of things. But then I also am going to get like a list of stuff that they need from me to help make their decision, quicker, kind of thing. Like
one goes with the other.
Yeah, exactly. And they just go one and the same, right? So, I'm going to be providing them with every detail on the financing, income and expenses, get the leases for them, figure out when the last rent increases were, give them some information on what I think the average rents are. Because typically stuff, multifamily that's selling right now is not at market rent, but sometimes it gets priced as if it is.
All too true.
But anyway, so
yeah,
giving them information on, what the market rents are. If they're flippers and they're doing flip projects, I give them, renovation cost, renovation estimates and stuff. Like I bring in my contracting crew and do renovation estimates, and then I tell them like what the ARV is going to be, like the after renovation value.
Yep.
And just like, little things like that. So I need to do a lot more work on the back end in presenting them with something. But once I do present that, if I'm going all the way to, give it to you, like I'm just like, you need to make a decision, yes or no, quickly. I know the market here in New Brunswick, and just building that trust, you know what I mean? After you do a couple transactions together, you have that trust. But it's just like, I'm going to give you everything you need to make a good decision on a good investment here in New Brunswick. And this is what you kind of need to do in return.
That with making the decision.
Yeah, exactly. Because I mean, there are people in New Brunswick that will buy, but we're trying to not. I mean, some people don't like it that we're going to try to bring Ontario folks in, but we won't get into that. But we're trying to grow New Brunswick and grow the economy here and bring in, maybe some more money, some more development and stuff like that.
Yeah, and I mean, these things are like they have a trickle down effect. Like you had mentioned the contractors, right? So if we bring somebody in from Ontario that's, very financially well off, let's say, and they go and buy 2, 3, 4, 5, 10 properties even.
Yeah.
And then they renovate them all, let's say. Well, you're going to employ all those contractors, the architects, engineers, and so on, all the way down sort of the economic circle, right?
Exactly.
Yep.
Yeah, exactly. Alrighty, so let's dive into a little bit about how little Billy or little Joe off the street can get into some multifamily investing. Okay, so like I come to you, I say, Murray, man, I don't have any money, or actually, no, I'm not going to say that, but I say, Murray, how do I get into multifamily investing? I want to buy my first multi-unit, whether it's a duplex, a triplex, maybe a 4-unit, maybe I want to move into one of the units, maybe I want to do this and that.
Yep.
What are you going to tell me? What are some ways that anybody can kind of, it's not going to happen on day one, but eventually get into some multifamily real estate investing?
For sure, yeah. So I would say the first thing is understand the fundamentals of a business. Very first thing. So at the end of the day, like there's a distinction between being a landlord and being an investor. And what a lot of people don't realize is that a landlord is somebody that looks after the property themselves. It's how it was done for years and years and years. Like that's how my dad started, kind of thing, right? Does all his own maintenance, looks after the property. He deals with his tenants every day and he loves it. He absolutely loves being hands-on with people. An investor is somebody, and I'll come back to your point there, but an investor is somebody that maybe remote manages, has a property manager, just looks at only the numbers kind of deal. and they don't even know who their tenants are, not for better or worse, not for being mean or anything. It's just they run it as a business, right? So if you understand business fundamentals first of profit and loss, how to analyze the deals kind of thing, that's really important. So I think education's the most important thing first.
Yep.
Understand, what's a cap rate, what's cash on cash, what's a profit or what's a loss. Some people don't even know that, right? So you have to understand all of your business fundamentals first, and then figure out, okay, well, what are the revenue streams that you're going to get out of a multifamily property? So like you have the property acquisition first, and you have appreciation, right? So the value of the property is going to go up. You got the debt pay down if you're going to use financing, right? So that's going to add value to it. You can do forced depreciation, which is actually, doing a renovation to the property to add value to it and add the ability to make some money on it. So learn all of those fundamentals first before you even think about it, because too many people jump in and think, oh, I'm just going to gut absolutely everything out and put it all back in brand new and life's going to be great. That's not how it works.
No.
How could I put it? There's realities, I guess, to, realistic budgets, realistic spending, what banks will loan you when you're doing a construction mortgage. Like there's all of these different facets to it. So if you're brand new to it, understand your fundamentals first. And then second thing I would say is hook on to somebody that actually knows or has done it before. So, why beat your head against the wall and try and learn everything right from scratch, right from the ground floor, when you could leapfrog your knowledge if you, meet somebody that's, able to do it or has done it in the past, I guess.
Yeah.
So whether that's a commercial realtor or, some kind of real estate mixer or group, or, if it is something like Espire Wealth Genius, doesn't matter, but talk to people who've done it before so you can avoid all the pitfalls and traps.
Yeah. And just learn from their mistakes and stuff like that.
Yeah.
And one thing to kind of add on to that a little bit, like with like grabbing onto somebody, whether it's a mentor or a partner or something like this, I was always against like partnering on like real estate transactions and deals and stuff like this.
Yep.
And like kind of grew up like, don't do business with family, don't do business with friends. Like it's going to kill relationships. And like a lot of times that is true. Like, trying to do business deals with like family, like maybe 9 times out of 10 it doesn't work out, or like there's going to be some resentment there, which you don't want at the family picnics or whatever. But
yeah.
But finding somebody, and sometimes family things work out, sometimes friend things work out, but finding somebody that you click with that's like business minded, that has the same goals and vision as you, to partner with and kind of learn together. And ideally it's somebody that knows a little bit more than you. You know what I mean?
I definitely agree. Somebody you can build with, if they're at the top of their game, maybe they're not going to have time to teach you kind of thing. But if they've got 2 or 3 properties, they understand the fundamentals.
Yep.
They've done it before. They made some mistakes. You can learn from them and kind of avoid those mistakes.
Yep.
Yeah, that's a good idea. The other thing too is kind of like to your point of family stuff. So I've learned all my stuff from my dad, obviously, where he's been in the business for so long. But people that are outside of that family friends group, generally it's a bit more just like of a business relationship. And it's easier that if something did go wrong, you can just kind of part ways. And like we talked about with investing being a little bit black and white, that's kind of a nice part about it too. So but yeah, for like back to your point about somebody off the street. So, fundamentals first is the most important thing. Find somebody that, knows a whole lot about it, and then understand, okay, how am I going to source the money for it? So as we had talked about with like the vendor take back and creative side, that's a bit more difficult nowadays. So maybe it's a pre-approval, or maybe you can use a home equity line of credit or something like that if you're in a decent financial position. But that's something else I'd say, is that it's not for, I don't want to say the ground floor, but like it's very difficult to get into if you don't have some money to start with.
Yeah.
So if you own a home and you've got equity to leverage against, maybe that's not the right thing for you, but it's one option, right?
Yeah. And you're not just going to be, you can't just walk off the street and just buy
a fourplex.
Yeah, buy a fourplex.
At like $100,000 a door.
Yeah, exactly. It's not going to happen, unfortunately. But there's ways that you can kind of set yourself up and start planning early so that you can, buy one in, 12 months, a year.
Absolutely.
2 years or something, whatever it is.
Yep.
And a year, 2 years to plan to buy, to work towards buying like a multi-unit is not a long time at all. And so like if you just kind of start thinking about it now, like you have plenty of time. Like most people listen to this, like you got plenty of time.
Yeah. And one of the other things I'd mention too, and this is quite a bit more technical, but your sort of residential properties, if you want to call them that from the loan perspective, are usually up to about 4 units. Depends on the bank, the mortgage broker.
Yep.
But if you get into the commercial side of lending, so, 5, 6, 7 units, generally they're looking more so at the assets production than they are at your own, personal ratios. Now that matters. Your net worth matters and all those other things. They do net worth checks when there's enough money involved and things like that. But that all being said, it's almost in a way easier to get into the commercial stuff, because if the asset's performing well, they're very likely to lend you the money.
Yeah.
Now, I'm going to preface this with, I'm not a mortgage broker. You don't talk to a mortgage broker.
Hey, that's it, folks. You heard it here first.
Yeah, no.
Yeah.
But it just from a general perspective.
Yeah. No, and I some of my clients that I deal with, like when they're buying like 4 units and under, they're like, okay, the application process is easier, and it is easier for them who have great credit, have a lot of money, have a good track record of, properties and stuff. But like for somebody that maybe doesn't have a huge track record, maybe, but has a bunch of money, the commercial side of things could be, a better, like going 5 units or more could be like, better in some situations. Yeah. And I mean, it's going to take maybe more money down initially, and the application process is going to be a lot more detailed. They're going to need a lot more information.
Yep.
But like you said, once you get into that realm of things, it's more like asset production and, the income, rather than residential, which is more
based on the person that's taking the loan.
Exactly. Yeah. So, okay. So that's kind of a little bit about, how you can kind of first get into multifamily investing. Do you have clients that are like, they have a house, they want to get into it? Do you recommend that they sell their house and then buy like a duplex, move into one side? Or do you say like maybe just do like a, like you mentioned, a HELOC, and then try and buy it? Or is there anything that you think is best?
I wouldn't say necessarily best, because it depends on your own personal situation, but I would say understanding the different methodologies that are there is going to help you to make the best decision for you. Now, it sounds like I'm not answering the question, but what I mean by that is that some people, from a family perspective, wouldn't want to have to deal with somebody living right next door to them. They want their privacy. They don't want to be in a duplex directly beside somebody.
Yeah.
For other people, that's awesome. They're really happy to do it. We call it like house hacking, right?
Yeah.
Get the other unit to pay for your mortgage kind of deal. That's awesome. For some people, let's say you've got a construction background. Well, maybe you're going to do the BRRRR method. You're going to buy it, renovate it, like refinance it. That could be a potential. Or maybe you just do a straight flip where you're not going to hold on to it at all. You're going to buy it in distressed condition, fix it up, and then sell it. So it depends on your financial resources. It depends on the particular position that your life is in. And then also your long-term goal too, right? Like I talk to a lot of investors about, okay, well, you want to go buy a triplex. Well, why do you want that triplex? Is it because you want to buy it and hold on to it for 50 years and get all of that natural appreciation over time and the cash flow? Is it because you want to, rip through a whole bunch of different properties, and go flip them and make a ton of cash and then go buy something huge? What's your long-term goal? What's your short-term goal? And then how do I help you find it?
Yeah.
So it again, it's not that I don't want to answer the question. It's so dependent on the particular person that you have to understand all these other strategies to figure out what's best for you.
Yeah. And that kind of comes back to what we talked about earlier about, I'm going to Toronto to meet with these folks and I'm giving them a list of what I need and they're giving me a list of what they need.
Yeah.
And then also like just what their kind of goals are. Like I have some clients that their only goal is to maximize the amount of units. Obviously it needs to like make cash flow a little bit, but like the main goal is they understand Fredericton, they understand New Brunswick, the appreciation that's going to happen. Their goal is to just maximize units, get as many units, more doors. And then, but I have other investors who are the opposite, and they won't buy anything unless it's got like a 10% cap and it's cash flowing, 8-10%, cash on cash return or whatever it is. And it's just got a cash flow like crazy. Then other people, they're just like, we just want the cheapest thing and we want to renovate it and then refinance it, to buy more. So like you say, it's just understanding what your goal is and what you want to do with the property.
Yeah, and that's part of my process too, is like, I usually have an introductory call with any investor that I have. So whether it's from, one of the groups or whether it's somebody else that I've met, I'll take 30 minutes of my time, sit down with them and say, okay, what exactly are you looking for and why? And then I can kind of tailor my search for them based on that. It's a very individual type thing, and it depends on the goals that you're trying to hit, right?
Yeah, exactly.
It's not just let's go buy a triplex for the sake of buying a triplex.
Exactly.
Yeah.
Okay, so let's talk a little bit about, like, we hear multifamily, commercial, and like multifamily, there's still commercial multifamily, but then there's also like commercial. You know what I mean?
Yeah.
That's like office spaces and big,
Storefronts and things like that.
storefronts and stuff like that.
Yep.
So let's dig in a little bit
This is my favorite one.
Yeah. Into like kind of like multifamily versus commercial, the differences there, like commercial, and whether it's better to rent to tenants and like residents and like, single people, or whether it's better to, lease commercial spaces to businesses and stuff like that. Just start talking about that and what your thoughts are.
Yeah. So from the multifamily side, you're going to have a lot of, individuals, a lot of families, and these people, that's their home, right?
Yeah.
There's a lot of emotion involved, and if there's family disputes or, heaven forbid, abuse or things like that, I've seen a lot of that kind of thing happen, unfortunately. But that changes the dynamic because it's a very emotional experience. Whereas when you're dealing with a business, kind of like the investor side of it, it's just, okay, what's the rent? What's the type of lease that I've got? Is it a gross lease? Is it a net lease? Whatever that might be. And that's it. It's very simple. But the other side of it is that there's a risk with commercial where, if that business fails, they're gone. And then can you fill the space? So in St. John, just as like a market snapshot right now, we've got a lot of big, huge, older buildings that are kind of disused, if you want to call it that. And they're just sitting empty, a lot of them.
Yeah.
So after, the big work from home thing, after the pandemic happened, a lot of them are vacant at the moment.
We don't talk about the pandemic. No,
well, I'm sorry.
No, I'm just playing. Go.
Yeah. But after that happened, it's left a lot of buildings vacant. But I see it as a massive opportunity because we have quite a bad housing shortage at the moment, and it's tremendously expensive to build brand new. So if you look at like a normal house that has like a regular bungalow, I think it's like $450,000 nowadays to build one. Or you can still buy one for like $250,000. That's essentially the same thing. It's not brand new. So taking that logic and putting it into the commercial space, like the retail commercial space, you can take these properties, renovate them top to bottom, and then you've got a massive, usually very well-built building that's going to house a whole bunch of people. So that's the other side of it, is that these buildings are usually built to a commercial standard. So they've got elevators, sprinkler systems, usually steel frame.
Yeah.
And, wider doors, concrete construction, wider doors, wider hallways. So the renovation isn't actually too bad because the code compliance is easier.
Yeah.
A lot of times they've got 3-phase power, so the power is no issue whatsoever.
Yeah.
Now, of course, it's case by case.
Yeah.
But I see it as a massive opportunity. So it depends, from the investing side, it depends on what you're trying to do. But commercial retail right now is suffering. There's no question about that.
Yeah.
So,
and multifamily
it's on
thriving.
Yeah,
it's doing really well.
Yeah, because there's a huge demand, right?
Yeah, exactly. Yeah, I've heard a lot of talks about people that are buying, like in this time and over the past couple of years when, COVID hit and everybody started working from home, were buying these massive, like, I don't know, 20, 30, 40 floor buildings, commercial buildings that used to be all office spaces. They're buying them and turning them into like condos or something like that, condos or apartments or something like that.
Yep.
And like, then just filling them, like, cause like everybody needs, a place to live. And especially here in Canada, we have so much immigration. And then especially, most of it's probably, I think, in Ontario, correct me if I'm wrong, but then a lot of people, like for New Brunswick, we have a lot of, immigration for the size we are.
We do, yeah. And there's massive influx of people, which is not the standard that New Brunswick's been. So, I'm here to wave New Brunswick's flag and, give attention to it. But for a long time, we were a very stagnant economy. We'd have little booms, little busts, but it was a very kind of just steady flow and not a whole lot of growth. So that's something else that investors should understand, is that this isn't the norm for New Brunswick. This is something that's just come in. So on the, like, being a responsible kind of investor, you want to look at the long-term projections as well. Is this, immigration going to keep up? And if so, what does that mean for my multifamily business?
Yeah. All right, so let's talk a little bit about multifamily versus commercial and what we're looking for when we're going through these properties. Like, if we're going through a multifamily property, like, what are we looking for? Does it need to be purpose built? Do they need to have separate meters? Whatever. Commercial leases, like, what are we looking for in a building there? What are we looking for when we're trying to, get leases signed? Like, do we want a triple net? Whatever it is. Tell me a little bit about. Oh, there goes my coffee. Tell me a little bit about what you're kind of looking for with your folks when you're kind of going through?
Yeah, for sure. So purpose built is one of the first ones. So in St. John, I should preface this with that we have a lot of old properties that are, over 150 years old, some of them over 100 years old. So it's hard to find purpose built stuff. A lot of them they are actually like a big old grand home that was converted into units.
Oh yeah.
So that's the vast majority of our stuff in St. John, but purpose built's always better. And as you had mentioned, individual meters are really important because then, you can have the tenants pay their own utility bills, and then that offloads some of the costs from the landlord and helps your profitability. So that's great.
And it helps with like consistency, because power bills are going to be all over the place. Some tenants crank their heat up to 30. Some tenants leave it ice cold down at like 17 in the winter kind of thing. So it helps with consistency there and budgeting.
Yeah, absolutely. You know what your expenses are going to be because you don't have to worry about the variability. And also if you have a super cold winter versus a super warm winter, right? That's some winters we have are crazy and they're going to freeze you to death, and other ones aren't. Yeah. So that's part of it. St. John specific. So foundations are a really important thing there. One of the properties that my family has, actually, we took the back end off of it. We call it like a back L. So you kind of have like the main house in St. John, and then a lot of times a little extension off the back.
Okay.
And a lot of times the back L's are not built on proper foundations. So this one actually had cedar posts directly into the ground. And that was it. Now the main house is on a proper foundation, but the back L was literally just cedar posts driven into the ground. There's only one left.
Wow.
So
and how old is that building? Like those cedar posts are probably
1880s. I think it was built. Yeah, 1890s, something like that. So
I mean, good for the cedar for holding up that long.
Oh, but sure, yeah. But that being said,
it's at that point now.
Yeah, there was only like one post left on one side of the house, so you got to know that going into a lot of these places and watch for it. The other one is the old cobblestone foundations that have like the lime mortar in the center.
Oh,
yeah. So what can happen is they're only good for about 100 years. Some of the engineers I've talked to have said, what happens is you get frost jacking in the ground, and that ends up pushing the wall in slowly over time. And then once the mortar starts to let go and fail, you need to replace that wall. Like it's a big job. Now, that being said, if you've got one that's got good drainage and everything else around it, the house could be in great shape and no problem at all. But if you see a stone like cobble foundation, you better have a really good look at it. Yeah. So that's one of the other things. There are poured concrete foundations and brick foundations too. They're usually not too bad as long as they don't have big cracks in them.
Yep.
The other thing I would say, and I've talked to a lot of people from Ontario and they don't seem to understand why, but brick facades in St. John, and I don't know if it's just the age, a lot of time the brick facades, the mortar in between starts to crack up really bad, and it's really, really expensive to repoint them or like to replace the mortar. You got to grind it out and put it back in, and it's a really labor intensive thing. So like brownstone, as people will call it, or brick facade places, they can be tremendously expensive to repair and maintain, whereas the wood frame houses, they're a bit more compliant, a bit more flexible. They move and shift with the ground kind of deal, and they're usually a bit better off structurally.
Now, do you find that like those brick buildings, like with the brick facades, do you find that they don't last as long? Because like here in Fredericton, like where we're not so close to the ocean, I don't know if that's
and I don't know if it's environmental factors or whatever, but they just don't seem to hold up all that well.
Yeah.
Or at least they're maintenance intensive, I guess.
Yeah. Huh. Because like here in Fredericton, it's almost like if you got a brick building, it's like, right on, like, or like a brick facade or something like that. It's like, it's a great, solid building, and you're not going to, zero maintenance, basically. I don't know.
Yeah.
But I mean, it's you say case to case, and in St. John, I think there's a lot more buildings that were built that way. And so in Fredericton, it's more like the odd one out kind of is.
Yeah. And I think that's part of it too, is that the age of a lot of the buildings has a big part to do with it, right? So if it's a more modern brick structure, usually they're not too bad because they're on better footings. But yeah, so that's one of the things I'm looking for in a lot of the multifamily stuff, and that's usually below like sort of the 6-unit level. Once you get beyond 6 units, generally in the city, it's more modern stuff. It's built in like the 1970s and up. So yeah. The other thing too is looking at like the plumbing and electrical systems. So I don't know if any of your viewers know, but there's a thing called knob and tube wiring. That's where you've got like a little ceramic insulator and an uninsulated wire that goes across the top of it.
Yep.
Insurance companies don't like it. Finance companies, obviously don't like it either. But sometimes you can't get insurance on them, or it's extremely difficult to do so. Or the insurance company will say, hey, you got to have it out in 30 days or something. So watching out for that's a big one too, because oftentimes people will splice into that old system and then it can cause all kinds of nightmares.
I don't even want to talk about it, but we just one of my guys just bought a building, and like from quick glance there was like no knob and tube, right? But it was this old conversion building, and anyway, we were like some weird stuff was going on. Like it was like a 4-unit, and like some of the lights in one of the unit were controlled by a panel in a different unit, so we like started kind of exploring a little bit. Sure enough, man, just knob and tube through the whole entire building. And I was like, oh my goodness. And they just like spliced on, like you say, and all the outlets looked good. You take the outlets off and it's like new wire. Oh yeah, right on. Yeah. But then like we started taking out some light fixtures, pulling back some drywall, and we were like, oh no. Anyways, so
it's something to watch for, I guess.
Yeah.
It's not that you can't avoid it sort of thing, but it's just with a lot of the older buildings, it's something to watch for. Yeah, and then from like a performance perspective, so usually I'd like to see an investor get into something with like an 8 cap, maybe somewhere around there. So it cap rate's basically like your net operating income divided by your value, multiply it by 100, you get a little percentage. So like a 10 cap is amazing. 10% cap rate is incredible. It's really good.
Yeah, and a lot of my investors, anyway, the people that I work with, try and get, once they purchase a building at like if they're purchasing them like really low at like 6 or 7%, they try and get them to like an operating cap rate of like 10, 11, 12% kind of thing.
Possible to optimize it.
Yeah, if possible, once kind of things are optimized kind of thing. If they know that they're never going to be able to get it there, then like they kind of pull back a little bit. But yeah. Now for commercial spaces, you mentioned that those are kind of tricky. Like you said, if a business goes sideways, like that space is going to be vacant. It could be vacant for a long time. Like even here in Fredericton, like there's a lot of office spaces like that are just sitting there, like empty. And like you see, listings out there, office space for lease, like nobody's calling, nobody's going to them. Now, what is it that we're looking for, like in commercial spaces, either as like an investor or as like a potential tenant that we want to see? Like, do we need bathrooms in every little commercial space? Do we just need big open space? What are we kind of looking for? And
so again, it does depend on what you're going to try and use it for. But I would say from like an investor's perspective, looking to buy the place, if you have an anchor tenant in place, so you've got I'm just going to throw some brand names. So if you got a Sobeys or a Canadian Tire or a restaurant that's been there for 50 years or something like that. If you got a really great anchor tenant that's been there for a long time, that's kind of like a mainstay staple business that everybody's going to frequent, then all of your little other units, usually you can get those filled because people say, hey, look, it's a secure building. Somebody's been here for a long time. It's well established. So if you are going to buy it and use it as a commercial space specifically, that's probably what I'd be looking for, something that has a nice, solid anchor tenant. That would be great. And then obviously, like a triple net lease is way better because they're paying for, your taxes and maintenance and everything else like that. So it's really good from the owner's perspective because you don't have a whole lot of risk.
Yeah. But my multifamily folks are like, I don't want anything commercial. Like, get me away from that stuff. I don't want that. But then like I got some commercial folks that are like, give me all the commercial, give me strip malls, give me like, give me big, skyscrapers. I'm like, what? Why do you want that? But everybody's different. Everybody has like, every investor also has like their niche of investing. Some people it's low income, affordable housing. And you look at the units and they're kind of a little bit beat up, but they're really targeting and, niching in on, making affordable housing for people. And like, if it's affordable, then it's hard for the owner and the investor to keep up with making it, doing all these luxury updates and stuff. So, some people look at them and they're like, oh, they're just slumlords and stuff. But it's like some of them are, but some people are just trying to cater to a very low income demographic and trying to give those people who just can't afford, $1,200, $1,300, $1,400, $1,500 a month in rent,
$800 a month is a lot more reasonable. $700 a month is a lot more reasonable. And not everybody can afford that $1,600 a month place.
Oh yeah, no, it's crazy. And rents have come up. I remember my first place was like $700 a month or so, or $750 a month, and I thought that was like crazy, like for this little 2-bedroom unit. It was a nice 2-bedroom unit. They had just updated it, and new appliances, new countertops, new flooring, paint. And I was like, oh, $750. Like, I was like, oh man, this is crazy. And then now, yeah, I haven't seen anything out there for $750. Like, anyway, but no matter the size or condition, right? So it's things are changing. But and the other thing is, a lot of tenants and like people that just own houses and look at investors and stuff, they hate on them because they're like, oh, you're charging $1,400 or $1,600, for this, stupid apartment. But what they don't realize is, I just paid $1 million for this building. If I don't charge at least $1,000 or $1,200 or $1,400, like I'm going to be losing thousands and thousands of dollars a month. Like most investors, they're not greedy and they're not trying to, screw people over. They're just trying to pay the bills, just like any other person.
Yeah, right? and that's the thing. Like I had sort of mentioned the difference between like a landlord and an investor. I don't say either of those with a negative connotation. It's just that if you're an investor, you're only looking at the numbers, right? Yeah. So you've got to make sure, and landlords too as well, you have to make sure that the numbers are going to work. But I think as a landlord, like a lot of those types of guys, they're older fellas that have done, or girls, doesn't matter. But those people have done a lot more like hands-on stuff. So they do their own repairs. They don't have to pay for a property manager, so they can afford those lower rents. But if you're a remote investor, you've got to pay a property manager. You've got to pay a full plumber's rate. You can't put a couple of shark fittings together with some PEX and do it yourself kind of deal.
Call your buddy to come do it in the middle of the night for a discounted cash deal or
well, whatever the case is. But the point being is that, if you're strictly an investor and you're using a property manager and all professionals for every single thing that has to happen to change a light bulb or whatever, you've got to charge a premium for that because you have to pay for it at the end of the day. So yeah. And that's a distinction I don't think a lot of people see.
Yeah. And when you're coming into like a new city as well, new city, new province, and like investing, it's going to take a while to build those connections, and your costs are going to be higher, to start, in most cases.
Yeah, and that's where and a little plug for realtors for a second, I guess, but that's where using a good like commercially or investing focused realtor is nice, because you and I both have connections with contractors, plumbers, electricians, whoever. Exactly. We can steer people in the right direction.
Yeah. Man, Murray, this has been awesome, but we're going to talk about a couple more things, then we're going to get out of here. So one thing I always ask everybody, where were you, where are you now, and where do you want to go, kind of thing, and like what are your goals? So I just want to kind of touch back on some of that kind of stuff. So you kind of told me a little bit about what you did before in the construction, crane operation, whatnot.
Yep.
And right now you're doing real estate kind of thing. You're setting your goals. You're improving every day. You're coming up. You're making more money, selling more properties, and educating more people, helping more people every day.
For sure,
which is awesome. But tell me a little bit about your goals and stuff for the next like year, 2 years, 5 years, and just give me a little bit of something for the people to look forward to when we have you back on. Where are you going to be, in next time we see you?
Yeah, so I mean, I obviously want to do more on the multi side than I am doing right now. Like I still do residential, and I'll always still do residential because I can. Like somebody wants to buy a house, I'm not going to shy away from them, but trying to make that the main focus of the business. The other thing as well is I want to try and get some new construction going. So I'm a bit new to that, but I mean, I know the construction side of it, just not the management side. So yeah, looking to maybe take one of my folks' properties and then do a new build on it kind of deal. So we'll see how that goes. It's a bit ambitious, but I like aiming high, and if you aim really high and then fall a little short, you're maybe further ahead than if you didn't aim that high. So
yeah, no, I totally agree.
Yeah.
What are you hoping to kind of just really focus on St. John, or are you hoping to expand to like all the other big cities, or what are your thoughts there?
I think staying local is a good idea because I understand it really well. But I mean, like yourself, I have referral partners in different cities, so it's not that I can't help somebody if they want to look in a different city, because I've got guys like yourself in Fredericton, somebody I can refer to that I trust. So yeah, I think I'll stick in St. John myself because that's where all my friends and family are, but just get a lot larger, a lot faster, trying up the transaction volume as well. But I do like offering really quality service to the people that I deal with, making sure they're well taken care of. So even if I did have a team someday or whatever else the case might be, I want to ensure that those people are well looked after. So that's going to be it, is just building kind of a commercially focused group of guys or gals that can help them out. So.
Yeah, and that's really important, like for people listening that think like, you know, you don't want to spread yourself too thin. You really want to get knowledgeable and learn. Pick a niche and learn and get good at what you know. And like for you, it's like St. John multifamily real estate, and it just makes sense. Like I even like in Fredericton, like I feel like I know Fredericton very well, but even like I'll go to like a smaller, you know, sub district or sub neighborhood in Fredericton, and I feel like I know nothing about just that little
I know the
neighborhood in Fredericton. I'm like, oh man, I still got a lot to learn about Fredericton, but you know,
we're always improving, right?
Yeah, always improving, always learning more and more, and just always kind of doing continual education and learning and networking and stuff too.
Yeah, and I would say like just as like a sort of why I'm doing what I'm doing, my whole goal is to, you know, enable investors to be able to make a living for themselves, to improve their lives. And like I'm sure people know that like if you invest properly, it can be passive income, right?
Yeah.
So helping people create passive income that's going to benefit their life, that's part of my goal, or part of like the why behind why I'm doing what I'm doing. And then just bringing attention to New Brunswick in general. I don't like that sort of stigma that New Brunswick has that it's a have-not province.
Yeah.
We got so much to offer here, so much natural beauty and, you know, business opportunity. People need to know about us. So that's why I'm traveling outside of the province sometimes to do it, just like yourself.
Yeah. So yeah, exactly. Well, man, Murray, this has been awesome. I really appreciate you coming all this way, and and being on. So okay, so if you want to chat with Murray, if you want to get into some multifamily real estate investing here in St. John, New Brunswick specifically, Murray's your guy. So Murray, how can they get in touch with you? What's your number? And if you want to give it out, your number and your email.
Absolutely. So my phone number is 506-645-0043.
Right on.
Murray at Exit SJ is my email there.
Yeah.
Or you can find me on Facebook, Murray at Exit Realty Specialists.
Awesome.
That'd be great.
Yeah. So if you want to learn more from Murray, you can definitely get in touch with him. If you have any questions for me, just go to my website, gosman.ca, and get in touch there. And happy to answer any questions, or if you have any particular topics that you want to talk about on the show, we are happy to accommodate you and take any suggestions. So it's been awesome having you here, Murray.
Thank you so much.
And thanks again for coming on, man. And we'll be chatting soon. So thanks a lot. We'll see you later. Bye. Thanks so much for tuning in. If you have any questions or want to learn more, feel free to check out my website at gosman.ca. Wherever you're listening from, leave me a 5-star review and let me know what you'd like to see in future episodes. Also, if you're a buyer or a seller and looking for some guidance in this ever-changing real estate market, I want to work with you. So get in touch today through my website at gosman.ca, or you can search Mackay Gosman Realtor on Google and get connected with me through any of my social media platforms. Thanks so much. We'll catch you on the next episode.